Okay, good morning, everybody, and welcome. I'm Joe Haggerty. I'm CEO of the Alexandria Chamber of Commerce. And this morning's webinar is going to talk about the American Rescue Plan and specifically the Restaurant Revitalization Fund, which I'm sure many of you know has $28 billion available to help a variety of restaurants and catering type businesses. So we'll be talking about that, and our experts will take that on in a minute. I also want to welcome Stephanie Beyer-Kirby, who chairs our board, who's on with us this morning. So thanks for being with us, Stephanie. And we want to thank KWC for helping us with this event. And they've also helped us with other briefings on PPP that we really found helpful and that our members felt very, very helpful in terms of their applying and being able to receive money. Want you to know that we are recording this and it will be available for your friends and neighbors and fellow restaurateurs. They can go to our website and pick it up later. If you have questions, you can put them in the chat at any time. We'll be watching those. We have a moderate number of people. You can, if you're really excited at the end, you can unmute yourself and ask a direct question. So let's get right to it. I'm going to introduce our speakers. So they're both from KWC, a certified public accounting firm, does a lot of all kinds of tax audit and consulting work. Steve Travis is a principal. He has more than 33 years of public accounting experience in audit and tax. He's got a wide variety of clients. And his clients say that his strength lies in his diversity of applying simplified yet appropriate strategies to complex tax and reporting issues. So that's a pretty good skill to have, having just done my taxes, I'll tell you that. And joining him is Emily Crimmins. She's a manager at KWC. She has over 15 years of public accounting experience. And Emily works with closely held businesses and their owners in a variety of industries, providing accounting and tax and advisory services. So we're going to begin right now. And they also have with them some colleagues who you may see later on, just in case we need to answer some very detailed questions. Craig and Donna are also with us from KWC. So I'm going to turn it over to Steve and Emily. Thank you.
Thank you. We appreciate being part of the Chamber's efforts to increase awareness of this fund, and we'll get into some of the specifics of this fund. The industry, the restaurant and food service industry was probably one of the first industries to be impacted by the pandemic, and are still being impacted and very materially impacted. So this is an important resource, monetary resource, potential monetary resource, and glad that this is being recorded and people can access it and let the whole community know about this resource. We're going to go over what the Restaurant Revitalization Fund is, who is eligible, when to apply. I will go ahead and answer the when to apply. Now is the time to apply. The portal is open, and we'll talk about, we're going to go through in pretty good detail about what is in the portal and how to apply. But so if you haven't already applied, please, as soon as you see this, or please do it as soon as possible for a couple of reasons that we'll talk about. We'll go through the calculation on how much you may be eligible for from the Restaurant Revitalization Fund, how many dollars you're able to request, and again, how to apply, and then a little bit about the documentation that you will eventually have to provide the government to show that you have spent the funds in accordance with the program. All right, we'll start with the first slide. Next slide, please. Great. So what is the fund? The Restaurant Revitalization Fund, as Joe said, it was established as part of the American Rescue Plan Act. In $28.6 billion was appropriated toward this. And when I say, we are encouraging people to apply, there's two reasons for that. One is sort of a first come, first serve thing. So you want to get your application in as soon as possible. And secondly, the more applications that are going to be received, the SBA can report back to Congress and the executive branch and say that this is a very popular program and there could be additional funding for the program. So as many applications, complete applications that we can get in there, that there's a chance that there could be more money appropriated for this. It's not as much as is appropriated, anywhere near as much for the PPP loans. And we don't know, but I don't think 28.6 billion may not be enough. So if it's first come, first served, you really want to get your application in there. And also for the hopes that there's more allocated to this fund by Congress if need be. Now, if you've received PPP loans or idle loans or grants, or you're using the employee retention credit, doesn't matter. It does go into the calculation. Some of the things go into the calculation of how much you're eligible for, but you can do both, or you can do all of those. So just because you received a PPP loan doesn't mean you're still eligible for the Restaurant Revitalization Funding Program. It's administered by the SBA, unlike the PPP loan where you had to go through a bank and then to the SBA. This is directly with the SBA. So when you apply, you're going directly into the SBA portal. The other thing to remember is that this is all, like the PPP loan, this will all become most likely publicly available since it is through the government. So things that you put on the application and the amount of funding you receive will eventually be publicly available to see by the general public or anyone. You can receive up to 5 million per restaurant or 10 million per restaurant group. Of course, most of our audience will be eligible for perhaps less than that. And you have until March 11th, which is 2 years after the date the act was signed into law, to spend these funds. So it's not like the PPP funds where you had 24 weeks or originally you had 8 weeks. You have 2 years to spend the funds on approved expenditures. Okay, the next. So this is very important, because it's called the restaurant. The restaurant is in the title, but it's not just restaurants as we may think of them. These are basically it's any business where the public or people assemble or go for the primary purpose of being served food or drink. Okay, so we have bars, saloons, taverns, snack bars, coffee shops, ice cream shops, eligible. You may not think of those as a restaurant, but they are eligible. Bakeries or other places where for example, a bakery where they may have sales to the public, and at least 33% of the sales are to the public coming in and buying something. So if it's a bread store and you're wholesale, you have a wholesale branch, and you also have a retail branch where people come in and order or order online and pick it up. As long as 33% of your gross receipts are sales to the public, then you would be eligible for this. The same for breweries, brew pubs, tasting rooms, and inns. You can have receipts. In an inn's example, you may go to the inn and stay at the inn, but as long as the inn, 33% of their business, of their gross receipts in 2019 were for food sales, food and alcohol sales, or drink sales, they are eligible. This again, wineries, distilleries. So if you go there and you have a tour at a winery, but then you come back and can buy food, as long as 33% is food or drink, you're eligible. Food stands, food trucks are eligible. Caterers. So really, it's important. Anyone who's listening in or watching this on reporting if you, to get out into the community that it's not, even though it's called the Restaurant Revitalization Fund, there are areas here that aren't, many people may not traditionally think as a restaurant that are eligible to receive this funding. All right. So at first, and I think people have, there may be a misperception that for the first 21 days, and this opened on Monday, that only disadvantaged businesses can apply. That's not true. All businesses can apply. But for the first 21 days, the SBA will prioritize the applications and the funding to small business, to disadvantaged small business entities. So even if you don't have 51% owned by a person that is considered disadvantaged in this case, it's still important to get your application in. Okay, and if you are a disadvantaged business, then certainly get your application in now. But everyone should get their application in now for the reasons we talked about. But for the first 21 days, the SBA will go through their database will prioritize the small disadvantaged business. So again, and this is part of it being publicly available. So if it's 51% woman-owned, the business is considered to be disadvantaged and will receive priority application and funding. Veterans as well, and then socially and economically disadvantaged persons that are, if they comprise 51% or more of the ownership. And this is a self-certification on the application. You don't have to prove your disadvantage. You just have to prove that you are a woman, a veteran, or socially and economically disadvantaged. And you can't do this after the fact. So if it is determined that you reorganized your entity, the business, so that if you were the 100% owner and then you made your spouse who would fit as a socially economically disadvantaged woman or veteran, a 51% owner, just for the purposes of this grant, or then that would be an automatic disqualification. So please be cognizant of that. Next slide. Socially disadvantaged. So here's the list of these minorities are considered socially disadvantaged for purpose of this. And they just have to self-qualify themselves. Black Americans, Hispanic Americans, Native Americans, Asian Pacific Americans, or subcontinent Asian Americans. So those, again, like women and veterans, are automatically considered disadvantaged for purposes of this funding, and will receive priority funding, and also their applications will receive priority attention. All right. Then you have economically disadvantaged individuals that are can say that they are disadvantaged. Next slide.
Hey, Steve, we do have one quick question.
Yes.
If someone has a 50-50 co-ownership with a wife, being a veteran, how could we make that work given the 51% ownership?
So the question, so it is my wife and myself being a veteran. So if you are both veterans with 50% ownership, then in total 100% of a veteran owns the business. So in that case, you would be under the 21-day.
Well, I think this question is that it's 50-50, but only one spouse is the veteran.
Oh, maybe, yeah. I mean, if that's the case, yeah, okay. Sorry, I misread that. So if that's the case, then unfortunately you're under that 51% ownership. So you wouldn't be in the 21-day priority period.
That's my interpretation as well. Yes. All right. Next slide. Well, let's go back to the previous slide. I'm sorry, Emily. So economically disadvantaged individuals. Let's say, let's go through an example of that. So if you don't fall into the, if you're not a woman or a veteran-owned, Black, Hispanic, Native American, Asian Pacific American, can you also be, how else could you be disadvantaged? Well, those categories I've mentioned, they are automatically considered disadvantaged. If maybe say that you could also say that you're economically disadvantaged if you are a same-sex couple and you did not say that you have felt that you have had difficulties because of that, either renting a place for your establishment or obtaining credit, then you can self-certify that you have been disadvantaged because of your situation, your status. So if you can make that argument, these other categories it's automatically consumed or assumed, I'm sorry. And then if you are determined that you are disadvantaged because of the relationship you were in, anything like that, you can apply if you feel that you've been disadvantaged because of that. For example, not being able to rent a place, not getting because of discrimination or access to capital. So again, you can those are economically disadvantaged that will get priority funding, and you do self-certify that. And again, remember this is all going to be publicly available. So, thank you. Next slide. Ineligible entities. Basically, if a common ownership, well, first of all, state and local government isn't eligible. If you have more than 20 locations in an affiliated business, not eligible. If there's another program, the Shuttered Venue Operators Grant, which is for live theater performances, if you were eligible for that, you can't also do the Restaurant Revitalization Fund. It's only for privately owned companies, not publicly traded. If you filed for bankruptcy or under an approved plan of reorganization, no. It's not, nonprofits are not eligible. And if it ends up that you don't qualify for at least $1,000 of funding, then based on the application, then they're not going to give you. So the minimum amount is 1,000 for eligibility. Let's go through some of the eligible expenses. So if you do get this funding, what can you spend it on? And it's a wide variety of things that if you're used to the sort of the restrictions on the PPP money, this is a lot more expansive definition of what you can spend it on. Payroll costs, utilities, maintenance, all supplies, your food, your beverage, your inventory, the things that you're reselling, other supplier costs, insurance, marketing fees, rent, things like that. Just about everything you can think of is under business expenses. If you're going to construct something, that is not eligible. If you're going to expand your business or your physical location, unless it's for outdoor seating, then if you're going to construct or outdoor seating, that would be an eligible expense, but not just regular expansion of an indoor area. Business debt. So if you have a mortgage or any other debt payments, both principal and interest are eligible for this, are eligible to be used with Restaurant Revitalization Fund. So you can't prepay principal and interest. You can't go ahead and say, well, if I owe $30,000 on a loan, I'm going to pay the whole thing off, but it has to be a scheduled payment. So if you look at this list and you think about it, many most companies are not going to have a problem over 2 years to come up with enough expenses, as long as they're still operating, obviously, at some percentage of capacity. So it's very expansive as to what the eligible expenses are. Basically everything except the fixing or expanding your indoor physical place. Next slide. So if you've already received funds through the Paycheck Protection Program, these are subtracted from the amount of your amount that you'd be eligible for. We'll go through a detailed calculation on that. If you've already, if you received a PPP loan, if you've already received a PPP loan, you must use the same EIN number on the RRF application as used on the PPP application. Okay, and if another thing is, if you have a loan application outstanding, a PPP loan application outstanding, so if you are just now applying for maybe the second draw or first draw PPP loans, and then you're going to apply for this grant, you must withdraw that application for the PPP loan, and then it will be added to your eligible amount of the RRF loan. So if you have any outstanding PPP loans, that's important to understand that you need to cancel that. You'll still get the same money if you do get approved for the RRF. All right, I'm going to turn it over to Emily, who's going to go through some examples of how you calculate the amount that you're eligible for, which is different depending on if you were in business if you started business in 2019, or if you started business before 2019, or during 2019, or during 2020. It's a little bit different, and also how to calculate the amount, and if you've just been around since 2018. Fairly simple calculation, but still interesting to go through. All right, thanks, Emily.
All right, thank you, Steve. So yeah, as you mentioned, there are 3 different calculations to calculate what fund amount you'll receive. And which calculation you use is going to depend on your end operation date. So for RRF purposes, your end operation date is the date that you made your first sale to the public. So it's not going to be the date that you applied for your EIN and registered with the state and did all the various things to establish your business. Instead, it is when you actually started sales to the public. So you are going to use calculation 1 if your business was in operations prior to or on January 1, 2019. So that's calculation 1. It's really the simplest of them. So you're going to take your 2019 gross receipts less your 2020 gross receipts, and finally subtract out any PPP loan amounts that you received. First or second draw loan, and regardless of if you received it in 2020 or 2021. And that's true for all these calculations. So calculation 2 is going to be for those applicants that began operations partially through 2019. So in this case, you're going to take your average 2019 monthly gross receipts and multiply by 12 to annualize those gross receipts. Then we will subtract your 2020 gross receipts, and then again subtract any PPP loan amounts received. So for those that are using calculation 2, if you've been partially operating in 2019, you do have the option to use calculation 3. So keep that in mind as I'm going over it, and I'll give you a brief example of when calculation 3 may make better sense. So calculation 3 are for those applicants that began operations on or between January 1, 2020 and March 10th, 2021. It's also available for any applicants that have not yet opened, but have incurred eligible expenses as of March 11th, 2021. So for this application, or for this calculation, what you will do is you're going to add up all your eligible expenses between February 15th, 2020 and March 11th, 2021. So all those eligible expenses that we just discussed previously that you spent during that time frame, that will be the beginning part of your calculation. Then you will subtract your 2020 gross receipts and your 2021 gross receipts through that March 11th, 2021 date. And then finally, you'll subtract out any PPP loan amounts received. So if there is a business that's been in operation, that started operation in 2019, for example, if they started, maybe it was December and they didn't have much in gross receipts and their annualized gross receipts isn't as high as their eligible expenses, it may make sense to use calculation 3. You'll want to go through both calculations though, because in calculation 3, you do have to subtract out 2021 gross receipts, which is different. So again, if you are in that scenario though, I do encourage you to, if you think calculation 3 might result in a higher funding amount, definitely go through the steps to calculate that. So now that I've gone through how to calculate it, I'll show you a couple examples under each calculation. So this is the calculation 1 example. Again, pretty straightforward. If you're in operations prior to 2019 or on January 1, 2018. So in this example, the business had total gross receipts in 2019 of $3 million and their total gross receipts in 2020 of $950,000. And they did receive PPP loans from the first and second draw of $750,000. So in this example, you just start with your 2019 gross receipts, subtract out those 2020 gross receipts and the PPP loan amounts that you received. So in this scenario, the applicant would have a total grant amount of $1.3 million. So the next slide, we'll go over the calculation 2 example. Again, this is for businesses that began operations partially in 2019. So here, this business started operations in September 2019, and I have listed out the September, October, November, and December sales there. So what you'll do is you'll just total up those monthly sales, divide that by 4 to come to your average monthly gross receipts. And in this scenario, that was $325,000. So then we're going to multiply that by 12 to annualize it out to get to 3.9 million. Then we'll take our total 2020 gross receipts, which were 1.5 million, and subtract that out, and the total PPP loans received of $500,000. So in the end result in this calculation, their total grant amount was $1.9 million. So lastly, we'll come to a calculation 3 example. Again, this is, you'll use this calculation if your business was in operations between January 1, 2020 and March 10th, 2021, or if you've had, if the business hasn't yet opened but incurred eligible expenses as of March 11th, 2021. So in this scenario, they're in operations as of February 2020. Their total eligible expenses between February 15th, 2020 and March 11th, 2021 was $775,000. They had total gross receipts from February 2020 through the March 11th, 2021 date of $375,000. And then lastly, they did receive some PPP loan amount of $75,000. So when we calculate this, their total grant amount is $325,000. And again, as I mentioned previously, if you were in operations as of 2019, you could have the option to use this calculation if it's going to result in a higher funding amount. So a lot of these calculations, involve the gross receipts. So I wanted to discuss a little bit of what you should exclude from 2020. As we know, in this COVID world, there was definitely some grants out there where funds were received, and that's what the majority of what can be excluded. So here's a list of some items that you should exclude. So any Paycheck Protection Program loans received will exclude from gross receipts. Any SBA Section 1112 payments, any funds received through the SBA Economic Injury Disaster Loan, or otherwise known as EIDL. There was also some EIDL advances, so we would exclude those, or any other grant funds that were received through the CARES Act. Also, any state or local business grants. There was the Virginia Rebuild Credit that, some people may have received, so you would exclude that as well. And then lastly, any payments through the Randolph-Shepard Act financial relief and restoration payments. So really what they're trying to get at here is the gross receipts will truly be those gross receipts from your operation of your business. So just think of that when you're pulling up your gross receipts. All right, so now I'll talk about the calculation. I'll go into the usage of the funds and what it's going to look like moving forward. So as we discussed, the funds do not need to be returned as long as they are used on those eligible expenses we touched on. And the funds must be spent on those eligible expenses that were or are incurred between February 15th, 2020 and March 11th, 2023. So don't think of this as just future expenses. You can also look at expenses that were incurred as of February 15th, 2020. So for example, maybe you haven't been able to pay rent or only paying partial rent. So in this case, you could catch up on those rent payments, and that would be considered an eligible expense and a correct usage of the funds. So again, we want to think also in the past and any expenses that were incurred. Hopefully this won't be the case, but if a business does permanently close after receiving the funds, the covered period will end on that date. So it won't end as March, you don't have until March 11th, 2023. So say you permanently closed in March of 2022. So that will end your cover period. And then any funds that were not used on eligible expenses would need to be returned to the government. So you just need to be prepared for that. If that does happen, again, hopefully not though. So all applicants that receive funds, you are going to have an annual reporting process. And that's going to be done through the application portal, which I'm going to show you. We have screenshots of that to go through. So it's kind of nice they're doing it in the same portal. So we'll be pretty familiar with it. The first annual reporting requirement should be completed by December 31, 2021. And you're going to report how much of the awards has been used against each eligible category. So if the business does spend all the funds by 12/31/2021, you'll be asked to certify that the proceeds have been used on the eligible expenses. And at that point in time, then it will be under review with the SBA. Right now, we don't have a ton of details on what this process is going to look like. You know, I imagine they're probably going to maybe ask for bank statements and invoices. I mean, definitely be prepared. You want a great record keeping. But right now, the SBA is concentrating on, you know, getting these applications through and getting the funding to the restaurants. And then after that occurs, they'll have more guidance regarding the reporting process. If you haven't spent all the funds by December 31, 2021, then the business will be required to complete the annual reporting submissions until all the funds are spent. And obviously that's something else we don't have details on. I would imagine if you spent everything, say by March of 2022, I would hope you could go ahead and just go into the portal and, you know, get that information in there and get it approved. So that's just a little bit, like I said, more details to come from the SBA on that. Okay, so there are a few ways to apply for this funding. Of course, the best option is to go directly through the SBA platform at restaurants.sba.gov, which I'll show you again, those screenshots. Also, if you have a point of sale vendor through the SBA, I guess they have to be SBA approved. You could use those. Also, you could do by telephone. You know, definitely don't recommend going that route because basically what they'll do is they'll send you a paper copy of the application. You're going to have to mail that back to them, and it will be longer processing times. And as Steve has mentioned, you know, you want to get that in there, get your application in as soon as you can to get your place in line. So we do recommend going through the SBA platform. So now that you know what your funding is going to be, you know how to apply, what documents are you going to need? So you will need the SBA Form 3172 completed, initialed, and signed. I do say that though, if you go through the platform, you know, you fill out the information, it's going to automatically generate an electronic copy of it, and it's all done electronically. And once you get to the end, they use DocuSign, and you can sign and initial everything electronically. So you don't need a physical copy of it. I mean, if you want to fill one out just to have it with you in front of you when you're going through the portal, you can certainly do that, but you don't have to supply a hard copy. That's the same for the verification of tax information, the IRS Form 4506-T. So if you use the online platform, that will automatically be filled out for you. They are requesting the previous 3 months of bank statements where the funds will be deposited. I guess they just want to verify, you know, that it's a bank account under the business's name or whatever entity it is, and that there is some transactions occurring. So they want to see that. And then lastly, you're going to have some items to provide for your gross receipts documentation. So what they prefer is business tax returns or your individual tax returns if you're a sole proprietor. So that's the preferred method. So if you are a business entity, it would be the Form 1120, the 1120S, and the 1065. For individuals, that would be your IRS Form 1040 Schedule C or IRS Form 1040 Schedule F. Again, this would be what they would prefer. If for some reason you cannot provide a tax return, then their next preferred method is a point of sale reports, including an IRS Form 1099K. But do keep in mind, if you are going to use the IRS Form 1099K, this is only going to include your credit card transactions. So if you are making cash sales, then that wouldn't be included in that form. So it would understate your gross receipts. So you want to keep that in mind. Another option is you could use bank statements. That would get pretty tedious though, if there is a lot of deposits coming in, and not all deposits are necessarily sales. It could be loan proceeds that came in, or an owner made a contribution to the company. So that could get a little tedious going through and picking out the gross receipts there. You can also use externally or internally prepared financial statements. So the bank statements and the financial statements aren't the preferred method, but they are, you know, viable. You can use those. They just state that it might result in a longer processing time than if you had provided a business tax return or point of sales reports. And then, as we discussed with some other type entities, there are going to be some additional documents to prove the 33% of gross receipts. And that's for breweries, wineries, distilleries, bakeries, or inns. Some documents that you could use are TTB forms, your state or local forms filed, which could be like a sales tax form, or internally created reports from your inventory management, sales reporting, or accounting software. So for example, maybe in your accounting software, you have separate gross receipt accounts that can prove that 33% of gross receipts were for on-site sales to the public. Maybe you have an inventory management system that shows what type of inventory you sold to the public. So for those businesses that did open, so that's for 33% of gross receipts for 2019. So that's the proof they want to see for that year. For businesses that opened in 2020, the applicant's original business model should have contemplated at least 33% of gross receipts and on-site sales to the public. So in this case, they would be looking for that business plan / model. You know, if you had that on hand, you would want to provide that. And then same for the inns, they need documents evidencing food and beverage to the public comprised of at least 33% of gross receipts for 2019. And the same thing if you're in operations didn't open until 2020, it would be your business plan / model. So I don't see any questions that have filtered in, but if anybody has any questions on the calculation or the documents, feel free to go ahead and drop those in there as I'm moving along. Oops, went a little too far. Okay, so the SBA did release a PDF file of screenshots of the platform. I was actually in it on Monday assisting a client, and I found it to be user-friendly, and I think it's a great system they have set up. It worked pretty well. So when you log in, you'll see on the left, there's a status bar to show where your application is. And here we have different tabs across the top, you'll see in blue. So those are the different sections that you'll have to go through to generate the application. So we have our eligibility, our business details, award calculation, deposit account, supporting documents, authorized owner, and summary. So the eligibility, as we discussed, there's certain entities that are not eligible. So you do have to be able to answer no to all these questions. I'm not going to go through every single one, but hopefully you can, it's big enough you can see it on your screen. But you do need to be able to answer no to all those in order to continue moving on. So the next section is our business details. So this section, the first section of this is figuring out if you have priority in awarding. So that is the 51% owned women, veterans, or socially and economically disadvantaged individuals. So this is where you're self-certifying that, and you can select that. By doing that, then you'll be in that 21-day window. Of course, if you are not priority awarding, still go on and apply as soon as you can to get your place in line. And then they're also asking here if you have filed for bankruptcy, I believe. Oh no, this is the, yeah, bankruptcy. And then if you're on the SBA franchise directory. So, you know, hopefully the answer will be no to bankruptcy. If you do answer yes, I'm sure there's going to be some additional questions regarding what chapter of bankruptcy and if you're still in operations to determine if you're eligible. And then also at the bottom, it got a little cut off, but this is where you can select your restaurant type. So all the different types, you know, we're not just thinking restaurants here, but all the various types of entities that could qualify. And then the next screen is simply our business information. So what type of business we are, if we're a C Corp, S Corp, individual owner. You provide all your information. Again, we'll want to use the EIN, ITIN, or Social Security number that you use for your PPP loans, if you have any. It will actually automatically pull the PPP loan information later on in the application if you use that same identification number. And for whatever reason, if we can't use the same one, we do have to disclose those to the SBA so they know which PPP loans that you have received. Then we also do have to list out all owners that have own 20% or more of the business. So that would just be, you know, their name, address, and their identification numbers here. Here you got to select if you do have any affiliated businesses. Here they're probably trying to determine if you have more than 20 locations. So if you are affiliated, you would answer yes. There's probably some additional questions, but if there are no affiliated businesses, then you can select no and move on. So the next screen here, this is where we actually get into the award calculation. It is going to calculate it for you, but I do recommend that you also have your own Excel spreadsheet or however you want to calculate it separately so that you can just double check that it's being calculated correctly. So the first section here is you will select out of all the eligible expenses, which ones that you anticipate spending money on. I don't think this is like the end all be all, like if you don't select an eligible expense and you later do spend those funds, like say you're not planning on outdoor seating, but you get the funds and then decide that you do, that's fine. I think here they're probably just trying to build the reporting portion of this once we get to that point. So select all that you think you'll use them on. And then section 2, that's where the PPP loan information will be. So you have a SBA PPP loan number for each loan, which is a 10-digit number, and then the PPP loan amount that was received. Again, if you use the same identification number in your business details, that information will actually automatically populate. Of course, you want to double check that it's accurate. And then for whatever reason, if it doesn't, you can manually enter that. And there is an option down below to add a PPP loan too. So. And then the next screen is where we are choosing which calculation are you using. So table 1, 2, and 3 correlate with calculation 1, 2, and 3. And then we have table 4. So table 4 would be if you have multiple locations and you're using different calculations for those locations. Like if you had one that's been in operations prior to 2019 and one that wasn't in operations until the end of 2019, then you would have 2 different calculations. In this case, we have table 1 selected. So it will pre-populate down below here at the bottom where we see the 2019 gross receipts and 2020 gross receipts. So whichever calculation you choose will populate the information that's needed, or the boxes, I should say, that where you'll key in the information needed. So So in this case, we need to provide the 2019 gross receipts and the 2020 gross receipts. And then they're also asking for a number of locations. And this is just to make sure that you're at 20 or under. Once you get that information entered and the SBA loans stuff was entered on the previous screen, there's a button. It got cut off here, but it's where you can calculate the grant amount. Once you click that button, it will provide an amount in that calculated award amount. And again, you'll want to double check that that's what you're expecting. Double check your numbers, so all that good stuff. So the next section is where we're actually providing what account you want the funds deposited into. So there are two ways to go about this. You can link your bank account using Plaid, and this is what the SBA does recommend because that will verify the account immediately for them and they'll know it's a true account. So it's pretty simple. You just click continue on that and you can search for your bank name and then you just log in using your online banking credentials and it will link it up and put the information in there for you. Of course, there is also the option if you don't want to link for whatever reason or you're having trouble linking, you can manually enter the information. And it's not going to, preclude you from getting any funds if you do it that way. It just might take a little longer. They're just giving warnings of that. So you obviously need the routing number and the account number, and if it's a checking or savings. And then here, if you do link it, it will pre-populate. And of course, you want to double check it all looks correct there. So everything's good to go there. And then we get to our supporting documents section. So this is, going to depend on what option, what table or calculation you chose previously on what documentation they're going to request. In this case, we have 2019 gross receipts and 2020 gross receipts where we need to provide documentation. And then also they're asking for the previous 3 months of bank statements. So it won't let you move on until you upload all the required documents. So in this case, we don't see it on the screenshot, but at the very bottom, there's a drop-down menu where you can select, you're uploading the 2019 tax return, and then you give it a name and you go out to a file directory and upload it. So you do need the 2019 tax return. For the 2020 gross receipts, it could be a tax return that was filed, a point of sales report, or externally or internally provided financial statements or the bank statements. So you'll see here they do provide information on what's preferred and what is approved but may delay the funding. So just keep that in mind that if you do the preferred documentation, that your application will move a little quicker. So once you get all that uploaded, it will let you move on. And the next section is the authorized owner of the applicant. So this will be who's actually signing the application. And it should be truly the person signing the application because they are using DocuSign and they ask some pretty personal questions in order to move on and sign the application electronically. So you'll provide that information. You'll need the identification number, etc. Once you get that entered in, it will take you to the kind of like a summary screen here showing what your estimated award amount is, what bank account it'll be deposited to. So you want to double check that information. And then you could select sign and submit application. At that point, DocuSign portion takes over. You answer those questions. And I'm sure some of you may have used DocuSign already. It's pretty simple as far as signing. It lets you know where to click and insert your signatures. Once you do that, it takes you to this summary screen. You'll receive a confirmation number. You'll also be able to view and download your application. That was actually a little harder for me to find, but it's just right under here, this view signed application. So you definitely want to click on that and go ahead and download it so you have it for your records. And then it just gives you further information on what to expect, how long processing time may be. If they do need additional information or have questions, they're going to send you a message through this portal. And the message section is just right here. And they'll also, when they send a message, it will send an email to the email address linked with the account. So you'll be notified that way as well. And every time you log in, it's going to look the same. Like, I'm pretty sure it takes you to the summary page when you do log in. And then you'll see the application status bar too, which can be helpful to know where your application stands once you do apply. So that was basically the end of the presentation here. I don't know if any more questions came in or if people have questions now that we've gone through all the things. So.
Thanks, Emily. You know, the SBA has gone from pre-pandemic, what was considered a sleepy little agency, to an amazing performance. You can see how that slick this application process is. Very impressive. And I just wanted to leave everyone with just two thoughts. You know, the first is, you know, disseminate the availability of this program to whoever you can. I went and picked up my sushi Friday, and I told the owner, I said, "Have you heard about this?" And he hadn't heard about it. So, you know, he was very excited or interested. And so we just, everyone should work on, you know, try to disseminate this into our community and in this industry, and also to get your application. If you haven't gone into the portal, registered the portal, do that as soon as possible. Get application in, and whether disadvantaged or not, please do it as soon as possible.
All right, Steve and Emily, thank you so much. Let's give everybody a second here to see if there's anybody that wants to unmute and ask a specific question. Nope. Okay, it looks like you covered everything in great detail, and I've seen a lot of these forms. It was good to see it ahead of time, Emily. It really helps you when you go in and you have to get to your computer and fill all this in. So that was very, very helpful. So I think we'll give people a few minutes back here, and thank you very much for your presentation, and thank you, KWC.
Thank you.
Thanks, everyone.
Thank you.
We're going to sign off. Thank you very much.